Welcome back to Simple Mind Space. Today, we're diving deep into the world of investing. Whether you're a complete beginner or have dipped your toes in the water, this ultimate guide will equip you with the knowledge and confidence to start your investing journey. Let's face it, the world of investing can seem daunting. With endless options like stocks, bonds, real estate, and even things like crypto and NFTs, it's easy to feel overwhelmed. Add to that the fear of losing your hard-earned money, and it's no wonder many people hesitate to take the first step. But here's the thing. Investing is crucial for building long-term wealth and securing your financial future. So let's break it down step by step, demystifying the jargon and providing you with a clear roadmap to get started. Part 1. The why and how of investing. At its core, investing is simply putting your money to work for you. Instead of sitting idle in a bank account, slowly being eroded by inflation, investing allows your money to grow over time, outpacing the rising cost of living and building wealth. Think of it like this. Imagine you have $1,000 that could buy you a fancy new gadget today. In a few years, due to inflation, that same gadget might cost $1,200. Your $1,000 has effectively lost value. Investing aims to combat this by putting your money into assets with the potential to increase in value over time. This could be anything from real estate to businesses to pieces of publicly traded companies. More on that in a bit. Part 2. Demystifying stocks and shares. For many, the word investing conjures up images of Wall Street traders frantically buying and selling stocks. And while that is one avenue of investing, it can feel intimidating and complex, especially for beginners. So let's focus on stocks and shares, a popular and accessible starting point for most new investors. When you buy a share of a company's stock, you're essentially buying a tiny slice of ownership in that company. As the company grows and becomes more profitable, the value of your shares theoretically increases, allowing you to sell them later at a higher price than you bought them. There's another way to earn from stocks: dividends. Some companies distribute a portion of their profits to shareholders, providing a steady stream of passive income. Think of it as receiving rent for owning a piece of that company. Choosing your investments wisely. Now, with countless companies out there, how do you choose the right stocks for your portfolio? While some experienced investors engage in active stock picking, meticulously researching individual companies and market trends, this approach requires significant time, knowledge, and risk tolerance. For beginners, a more hands-off and arguably safer approach is investing in index funds. Think of an index fund like a diversified basket of stocks. Instead of putting all your eggs in one basket by investing in a single company, index funds spread your investment across hundreds of companies, mitigating risk and mirroring the performance of a specific market index. One of the most popular index funds is the S&P 500, which tracks the performance of 500 of the largest publicly traded companies in the United States. By investing in an S&P 500 index fund, you're essentially buying a tiny piece of all 500 companies, allowing you to ride the overall growth of the U.S. stock market. This approach, often championed by legendary investor Warren Buffett, takes the guesswork out of stock picking. You're not trying to outsmart the market, but instead aligning yourself with its long-term growth potential. Part 3. Addressing common investing fears. It's natural to have concerns when it comes to investing. After all, it involves your hard-earned money, and the fear of loss is real. Let's tackle some common fears head-on. Fear. What if I lose all my money? Reality. While the stock market does fluctuate and the value of your investments can go down temporarily, the chances of losing everything are slim, especially with a long-term approach and diversification through index funds. The key is to avoid panic selling during market downturns. History has shown that the stock market tends to recover and grow over time. Remember, you only realize a loss when you sell your investments at a lower price than you bought them. Fear. Investing is only for the rich. Reality. Investing is accessible to everyone, regardless of income level. Many platforms allow you to start investing with small amounts, making it easier to get your feet wet without breaking the bank. Part 4. Exploring the fast lane of investing. While investing in the stock market is a reliable long-term wealth-building strategy, there's another avenue worth exploring: investing in yourself and your own ventures. Think of it this way. Instead of solely relying on the growth of external companies, why not invest in your own growth and earning potential? Investing in yourself could mean acquiring new skills through courses or training programs, ultimately increasing your earning capacity. Imagine transforming your skill set and unlocking higher-paying job opportunities. That's a direct return on investment. Another exciting avenue is starting your own business. While it requires more upfront effort and risk, the potential returns can far outweigh those of traditional investments. Imagine building a successful business from the ground up, creating something valuable, and reaping the rewards of your hard work and ingenuity. The possibilities are limitless. Key takeaways and actionable steps. Investing doesn't have to be intimidating. Here are some key takeaways and practical steps to get you started. Start with the basics. Educate yourself on the fundamentals of investing. Plenty of free resources online, including articles, videos, and podcasts, can provide a solid foundation. Define your goals. What are you hoping to achieve through investing? Are you saving for retirement, a down payment on a house, or simply growing your wealth over time? Having clear goals will guide your investment decisions. Start small, start now. You don't need a fortune to begin investing. Start with an amount you're comfortable with and gradually increase your contributions over time. The power of compounding will work its magic. Consider index funds. For beginners, index funds offer a simple, low-cost, and diversified way to invest in the stock market. Explore alternative investments. If you're feeling adventurous, consider investing in your own education, skills, or even starting a business. Remember, the best time to start investing was yesterday, but the second best time is today. Don't let fear or procrastination hold you back from building a brighter financial future. Take action, stay informed, and watch your money grow. That's it for today's episode. I hope you found this deep dive into the world of investing insightful and empowering. If you enjoyed this episode and found it helpful, please hit that like button, subscribe to the channel for more valuable content, and share this episode with your friends and family who might benefit from learning about investing. Until next time, keep those minds sharp and keep exploring the endless possibilities of personal growth and financial freedom.